Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up discussion today. We've got Bitcoin dipping beneath 90K and the S&P closing below its 50-day moving average. We'll discuss the significance of that in a moment. We'll talk Aave launching their new app offering 9% APY with up to $1 million of guaranteed protection, and we'll talk about Hyperliquid being up 6% in this kind of market to $40 on the expectation of incoming DAT buys. We also got the latest on price action on crypto and NFTs as usual, plus general market discussion. So stay tuned for that. I am joined by Legendary in the co-host seat with me today. We're ready to get into it, but just a reminder, friends, before we do, nothing that we say here is financial advice. This market is incredibly risky. We do not know anything for sure. So please do proceed with caution and exercise your own judgment. When I say we don't know anything for sure, I really mean it today. We do not know why the internet is not working. A lot of the internet is not working today, which means we are not live on X Spaces. We are not live on X Video, but we are live on YouTube. I hope that at least is the intention. Hopefully some of you have been able to make it across. I can see some of you in the live chat. Appreciate you for getting over. Murray, Justefano, Mapogo, Swizzy, Rahim, who's supposed to be on the show with us today but can't even get in, is in internet jail, trying to get into the show as we speak. Swizzy, Corona, Oxy in the chat. Good to see you, Rocky, as well. Legendary, what do we do on a day like today? The internet's down. How are you feeling?
GM Jim, we are happy on a day like that because people can't press the sell button. If the internet's not working, the sell button cannot be pressed, and BTC is at 91K suddenly again. So this is good because Americans will wake up, but they won't be able to dump the market even further. Apart from that, it's interesting. So apparently it is Cloudflare this time, which is being down. Last time we had an outage, it was AWS. It was Amazon's web services. So we now get to share and compare and see which websites are depending on Cloudflare and which ones are depending on AWS. So to get the complete picture, what parts of the internet are breaking down when one of the two is not working. ChatGPT is also not working. X is not working. We can't do live research on the show today. We luckily did preload all of the tabs we wanted to share, so we can discuss what we want to discuss. But if you have further questions, there's a 50% chance I might not be able to dig into that because the internet is down.
We're doing the show from screenshots today. We're like, okay, what if this website goes down during the show, right? Let's just take some screenshots and make sure we know what we have to talk about. So there'll be maybe a little bit of improvisation on the show today, which I don't mind. Like, you know what? I don't mind. I think we've been a little bit bearish generally. People are getting tired of us being a bit bearish. So, to inject some energy and interest into the show, might have to be a little bit more, do a little bit of improvisation. How do you feel about that?
Good. What unfortunately is working is CoinMarketCap and CoinGecko. So we don't need to improvise on the price action once we get there. We can share how everything is in the red.
Okay, fair enough. Do you think, though, that means that as soon as people will be allowed to press the sell button, are we going to get a bigger sell button when the internet switches back on?
I mean, is Uniswap working? No, Uniswap is working. Rabbi is working. DeFi Llama is working as well. Yeah, I'm joking. People can press the sell button.
Okay.
It's currently not the issue.
Okay, so no respite. Sorry, guys. People can still press the sell button just like they have been the last week. A lot of these prices down in double-digit % now over the last week. Bitcoin being down 13, ETH being down 15%. So it's not pretty at the moment. But as usual, we'll be here to discuss it from all angles. And that's what we're going to do. So let's start with the price action, as always, to get you up to speed with what you need to know. Starting with Bitcoin, of course. We got Bitcoin down 4% on the day to 91.2K. Dipped beneath 90 for a period of time overnight, which was a little bit concerning, arguably still concerning, still concerned about the health there, not looking particularly strong. Although I think people are seeing this as a bit of a key level here. Maybe it can bounce back up. ETH down 4% to just over 3K. Also dipped beneath 3K overnight. I think it went to 2.9 for a period of time. So that's worth noting. XRP is down 4% as well to $2.17. Solana's down 3% to 137. Legendary, if you just scroll down a little bit so I can see where Hyperliquid is in comparison to this. I need to scroll down a bit more so that I can see, because I can't. Oh, Hyperliquid, there it is. Oh, it's way higher than I thought. That's why I missed it. Up 5% to $41. So Hype looking incredibly strong in the midst of this incredible sell-off. We're going to talk about that in a bit more detail when we discuss the DApp buys which are potentially coming in for Hype, and maybe contrast that with the potential sell pressure which is supposedly coming from the team at some point soon. Will there be another airdrop? We'll discuss maybe those things and tie them together and share some thoughts towards the end of the show today. I think that's our final segment, or the middle segment. Getting into the meme coin side of things, we have Doge down a few percent to 15 cents. Pepe is down a few percent as well. I said in the chat just earlier today or yesterday, I think I'm short ETH and short Pepe specifically. Again, after being short ETH before, and now just felt like adding Pepe to it, because if you think about it, it's worth a lot of money. It's still a $2 billion market cap. And if we're going to keep going lower, then I think you can see that move lower. Although I was also thinking maybe it's a little bit like Doge now. Pepe is just going to always trade at a crazy market cap. I don't know. Let's see. Pump is down 10% on the day, back to a $3 billion FDV. So that's well below the ICO price of $4 billion now. So that's experienced some big sell-off. Trump is down a percent. Pengu is down another 5% in the last 24 hours. Pengu's sell-off has been aggressive across the board. It's actually dipped beneath a $1 billion FDV now, after the huge run up to 3 or 4. So alt season clearly getting smashed here. SPX down 3%. Fartcoin is flat. Tibber is down 11%. So that's most of the coins. Oh, and then we also had Rect coin. I don't know if you saw this. Rect going down. I think it was 75% at one point, or 50%, or something insane. Huge sell-off, with the explanation being given was that it was over leveraged borrowers who had borrowed against their Rect, and they had got liquidated, which caused the cascading liquidations. And there was a huge amount that was being borrowed against with Rect as its collateral. So that caused a huge sell-off. And now, the price is still down 35% on the day, although it has recovered a little bit after that colossal sell-off. Getting into the headlines themselves, which we're going to get into details in just a bit. We're going to be talking Bitcoin dipping beneath 90K, S&P closing beneath its 50-day moving average as well. We're going to talk Aave launching the new app offering 9% APY with up to $1 million of guaranteed protection. I think that's pretty huge news. And then finally, Hyperliquid's up 6% to $40 on expectation of incoming DAT buys. Some notable sales. Still seeing some nice CryptoPunk sales. CryptoPunk 3D glasses selling for 58 ETH. That looked pretty nice. On the NFT side, everything's down a few percent as well. I wouldn't go into any more detail than that, or don't think we need to. Getting into the rest of the roundup, though, Monad ICO has gone live on Coinbase at 2.5 billion FDV and has only had around 110 mil committed so far. Remember, they're trying to raise, I think it's 180 mil at this valuation. 7.5% of the supply is for sale. And, they're expecting over commitments, right? That's, because then they want to allocate this out to the people who, so it's been a bit of a slow start there, I would say. El Salvador buys an additional 1,000 Bitcoin. Hopefully forming some kind of bottom, but I'm not sure there. Fidelity Solana ETF is going to go live today. Robinhood begins to offer short selling on mobile. I think that's pretty cool. I think that's going to be a product we are in agreement. Perps is going to be one of the biggest products as it continues to get rolled out. I think people will like that offering. Hyperbeat announces foundation in preparation for token event. Coinbase Ventures announces investment in USDAI. I think people thought that was pretty significant. And then a couple of other bits of news. Coinbase changed its bio to December 17th, teasing big announcement. And Pudgy Penguins announces its first book partnership with Random House, available to purchase on Amazon. I think that is very, very cool. Doesn't matter about the price. Well, I'm sure if you're an investor, it matters the price. And as market participants, I'm always interested in the price. But I think that is pretty cool, irrespective. Random House, huge publisher, Pudgy Penguins, announcing its first book, available now to purchase on Amazon. That is the roundup, Legendary. Before we get into the main stuff today, I'm curious for your thoughts. Is there anything catching your attention around the space here? I think there's a few interesting bits to zoom in on.
There's quite a few, yeah. Starting with Monad ICO, actually interesting to see that one. Yes, the market conditions are way worse than they've been a couple weeks ago, or when was Mega? 2 weeks ago, roughly 2-3 weeks ago, something like that.
Yeah.
But still seeing that the market is not blindly aping into that, despite the price action on Hyperliquid on the pre-market saying that it would be a good buy solely based on that, is a good signal. I like that the market's not blindly aping into things and oversubscribing that. But I also think that there's multiple reasons to that. One is simply that it doesn't happen in a, I don't want to call it necessarily permissionless way, because you also had to KYC for Mega ETH, but that it happens on a centralized exchange.
I was thinking this as well.
B, that Europeans are excluded. You know, the Europoors apparently also have money.
Oh, that doesn't matter. That doesn't matter.
Doesn't matter.
You're saying all this European capital was about to flood in and they've been excluded. So no.
No, I have to say that. No, but it's interesting to see that. And it's also interesting to see that it is, I think Hyperliquid should be working for, yeah, there we go. That is reflecting on the price action on the pre-markets. I think yesterday when we reported on that, it was looking way better, or way better is maybe exaggeration. It was at 5 bill, and it did lose 25%. It's down to 3.9 bill, the pre-market for Monad, that is. And it's also interesting to see that it very much moves in sync with the Mega pre-market, despite the interest in the sales being completely different, but they very much move in sync. Mega is now at 3.85, Monad is at 3.9. They're basically doing the very same thing. And obviously, there's also discrepancy on the pre-markets on Hyperliquid and on Polymarket, because Polymarket sees the things way lower. But I think it's important to keep in mind that the Polymarket is worded in a specific way that is asking about the token valuation, about the FTV 1 day after TGE, so 24 hours after that, which might explain some of the discrepancy in prices which we're seeing.
Interesting. So a number of interesting points there. I will give my thoughts on some of them. The first idea, which I agree with, is that I think people are reluctant to sign up on Coinbase. I don't think Coinbase have a great record for user privacy. And I know sometimes people say, oh, people don't care about privacy in general. People who are in crypto, who are allocating significant amounts in crypto, do care more than the average. And we're like a relatively small group of people. And I don't think when the data hacks happened that people were particularly happy with Coinbase for that reason. And I think there's a little bit, like, it's a bit of a joke, to be honest, how Kobe, as once Echo got acquired, has been going around doing all this customer service for people, for unlocking accounts, freeing up capital that had allegedly got lost in Coinbase, so people can't access their funds. And he just looks at it for 25 minutes or something and manages to free their accounts and unlock their money that had allegedly got lost, or was told that you couldn't get it. It's like, this is meant to be one of the biggest companies in crypto, and it's taken one of the biggest crypto traders, personalities, to join and do the hand-to-hand combat of customer service in order to get it up and running and moving and whatever. And I think people, like, I don't think that is good. Our position for signing up for Coinbase shouldn't be like, oh yeah, let me sign up for this sale. And the worst case scenario, I'll just DM Kobe I'll just tag Kobe in a tweet, and hopefully he'll reply, which I think he probably would, because that seems to be his mission when it comes to customer service. But I don't think it's a great look for the exchange itself. And I think that there probably is a little bit of, I heard one prominent person at least say that, you know, they just don't really want to create a Coinbase account, basically, because of a prior bad experience. So I agree with that. I think that's at least a part of it. The other part that I think is interesting is this intertwining of Monad and Mega, which is interesting because, well, the timings, I guess, have just made these two things happen. But also, one of the strong arguments I believe the Mega group have been making is that the L2 classification is kind of not relevant. Like, you've got to forget about it. It doesn't matter that we're in L2. There's always been an L1 valuation premium, and L1s have always traded higher. And I guess what this is showing is that maybe people are finally buying into that, at least because of the proximity of these two, with the valuations trading much closer. Maybe Mega is sufficiently differentiated from the previous L1s to say, like, okay, well, you're actually trying to compete with Solana, for example. And I wouldn't be surprised if that was one of their objectives of trying to say, like, we're the fastest, we're the best. Well, we're the fastest at least. And so kind of cultivate a competition with L1s rather than cultivate a competition with L2s, which have largely become maybe less relevant at accepting base, of course. So I find those things interesting. What do you come back with after that?
Yeah, I've been thinking more about that as you've been speaking, and I think we kind of asked the question of why is Coinbase doing their own ICO platform when they have acquired Kobe's, Echo, and Sonar? And maybe it is a bit of an admission that they realize that they haven't been tremendously successful. But okay, that's another statement. They completely failed with the NFT marketplace. They failed with the perp side of things, and they want to have that ICO business. And yes, I think Kobe in a replay kind of detailed that Coinbase's ICO platform is for later stage ventures that get a Coinbase ICO. Early stage stuff is more supposed to happen on Echo, and then there's Sonar as well. But maybe it's also an admission that the stuff that they've been doing out of the core business is not the most successful, is not working. Base as an L2 is maybe the exception to that rule. And they just wanted to buy that. Plus, they wanted to buy a trust element with having Kobe. Although I do have to agree with you that, you know, and Kobe is, like, it's amazing that Kobe's actually fixing the shit. In terms of people who were locked out, I think Quid said he was locked out for years and years out of his Coinbase account, and Kobe fixed that for him. Also, the deposit mismatches. I don't know if you've seen that specifically, where people were depositing USDT on Solana, and only USDC could be processed to that deposit address, and people had like hundreds of thousands, millions probably cumulatively stuck, and he fixed that as well. It is a bit ridiculous that it has to come to a place where like Kobe is stepping in to fix this. And Coinbase could not do that themselves, but it certainly shows that they bought a massive trust element, goodwill, and a very, very strong brand with acquiring Kobe's goodwill plus his platforms.
Yeah, I mean, after hearing all these stories of everyone having their locked funds forever, it's hardly the perfect time to be like, oh, and by the way, as part of the sale, you can lock up your funds with us, give like up to 100 grand if you would like to. It's not like the best story to be telling, or having those two things next to each other. Although I believe mainnet's live at the end of the week. So, you know, to the extent that you're concerned about locking up tons of funds for a long time, so long as you get them back and Coinbase doesn't do anything annoying with it, like it's a real quick turnaround time on this occasion. I want to clarify that because I heard that yesterday. But I think that's definitely worth noting. I wonder if anyone in the chat has the specific date for mainnet going live and the tokens, which will then be distributed to you. So let me know if you have that, because get that confirmation. There's one other thing, Ledge. By the way, I think Twitter is now working. If for me, I don't know if it is for everyone else. I don't know what the implications are. I don't think we can go onto Spaces now, so we'll just keep it live on YouTube anyway. There's a couple of other interesting things I thought. I thought Robinhood beginning to offer short selling is pretty huge. I'm still of the opinion that perps and maybe equity perps are going to be really, really important moving forward. And I think, although the native crypto people will not like this as much, it's going to be a lot of the reason why some core crypto trading activity is going to disappear even more, because you're now up against the competition of trading side by side with Tesla, with Nvidia, with Palantir, with Google, with Meta. And maybe sometimes a 3x Tesla long is going to look way more attractive to an investor than a 3x Solana long, especially when you factor in the way these things have performed in the last 12 months. I really think that that will be true. So, and if equity perps become a big thing and the farming activity even goes to those assets, and we don't know whether Unit on Hyperliquid will do a token or not. I don't know if any of that stuff is confirmed. I guess just using the products at a minimum would get you the exposure potentially. And then that's better than trading other stuff instead. So that's my instinct as well. Although this news was about Robinhood offering the short selling on mobile, which I think will probably get some uptake as well. Ledge, what do you think?
Do you happen to know if the shorting on mobile is only for stocks or if you can short crypto as well?
I don't know. That I do not know. I suspect because they're pioneering this thing where everything's just side by side now, isn't it? So the answer to your question is I don't know. I would bet that it's going to be side by side, but I don't know 100%. Why? Why would that be interesting to you? What's the difference for you?
I just would like to know how if it's also for crypto. I think I don't know. My guess would be it's only for stocks only at the beginning. But could be both. I have no clue. I can't research that right now because most of the things are down and X is down again for me.
Okay.
And it would be interesting to know if Robinhood sellers, or Robinhood sellers, Robinhood shorters are trading in a different way, say from people trading on Hyperliquid and have that side by side, just to see if it's a different demographic with different thesis, or if it's all the same with different volumes only.
Okay. Yeah, I find that interesting. Even more, a couple of other things before we get into the main headlines. What do you think of the president of El Salvador tweeting this 1,000 plus Bitcoin buy? Like, I was asking, maybe tongue in cheek a little bit. Well, I wasn't. I was being completely serious, to be fair. Like, who's the next buyer? Who is the next buyer of Bitcoin? I can't identify them. The answer seems to be president of El Salvador and maybe others like him, although there are not many like him. So the question now is who's the next buyer then? who's the next buyer? You've got the president of El Salvador buying the dip. Ledge, does this make you more confident, less confident, directionally? What do you think?
Not really relevant. I feel like it's just too small of a buy. The thing that I found more relevant in terms of institutional adoption was, or governmental adoption, it was the Czech Republic who added, I think, BTC to the treasury, and that was after Christine Lagarde said that no central bank in Europe will hold BTC. Nobody's going to do that, and Czech Republic actually made that step to do that. That I found more relevant, other than it's great what El Salvador is doing, and obviously they've been focusing on BTC, but I don't think it's too relevant in like the global context. But talking about El Salvador, did you see this post, which I also can't bring up on screen, by Bukele, by the president, where he was sharing approval rates, and I think he has like a 90% something approval rate. It was like Vladimir Putin in seconds with 70 something, and he was posting "It's lonely" at the top.
Yeah, that was funny.
Very, very hilarious list and post to make.
Yeah, when you're kind of operating a one-party system, it's I don't know if they're technically democratically elected there as well, but it's might be easier to get that high number. Although I think he's done an awesome job in cleaning up the
certainly.
place for sure, right? Absolutely incredible job cleaning up one of the most dangerous places in the world. Final thought here, Ledge, on price before we get into the main stuff. I just remembered earlier today, we had we almost put the bet on the show, and I was reminded by this, where I think we were like 100-ish K. You thought we would go to 110K. I thought we would go to 90K first. And so I was right on that. I was right on that.
You should have taken the bet on the show. I thought about that
Should
too.
have taken the bet.
Your lawyery side wanted to discuss terms a bit more in a different way. And my details, I was like, yo, let's bet. Let's put a gamble on.
This is why I have always said, in order to do business, or you just got to if you're formally educated, you really have to just unlearn all of this stuff. Specifically, if you're in the professional services, like whether it's accountancy, lawyers, whatever, you're just trying to sort the terms out too much. Just take the damn bet. Go with your gut. That's what I should have done at the time. That's my learning from that. But look, you said you didn't think it was relevant. I think it is relevant that I mean, look, it's only one data point, so maybe it's not the most relevant. But when you're thinking about marginal buyers, which is what I'm continuously thinking about at the moment, I think two things. One, Saylor actually did end up buying $800 million worth of Bitcoin, which is a reasonable buy for them. That's fairly large. During a period of time where that average buy was over 100K, and with all of that buy pressure, Bitcoin has still tanked more than 10% in that period of time. Then you have, okay, who's the marginal buyer? Maybe it's countries, sovereign nations. Okay, well, El Salvador is buying 1,000 plus Bitcoin, which is 100 million. You say it's tiny. It's not entirely insignificant. It's, it's not as much as Saylor for sure, but it's not insignificant. And the price is still doing what it's doing. So I'm not entirely sure where such a voluminous sell pressure is coming from. Because I think the OG selling has kind of happened. That was like pretty well tracked on Hyperliquid, for example. But I don't know. It feels very weak at a time when it's so relentless. You have these humongous entities buying, and that it can't absorb the sell pressure in the moment. Is it? I've seen an argument more that like, look, this is the centralized exchanges manipulating as normal. I'm actually fairly persuaded by the idea that, look, until this is why I'd be watching open interest quite heavily here, until people stop longing every bottom and making it such that the exchanges would go out of business if they had to pay out all of these, or not go out of business, but if they had to, things just can't go up in a straight line, right? And if you keep making it so profitable to go long, then the business model doesn't work. So I don't know. Is it them just having to take it lower before you can go higher? Potentially, I'm kind of persuaded by that. What do you think, Ledge?
I don't think it's centralized exchanges selling. I think I think the OG whale selling is still going on. And it's something that Kathy Wood pointed out in a newsletter that this is what they are seeing as well. That it's basically the institutional buyers, be it Saylor, as we're showing on screen right now, doing the 836 million BTC buy, as well as others that are kind of offsetting some of the sell pressure. In absence of that, it would look way worse. Just compare, let me get it up on screen. Maybe this is then also the segue into the first headline, since we're already speaking price action. Just look at the fact we said, Saylor, that was between the 10th and 17th of November, has bought 806 mil of BTC. In the time period, that's the 10th, what did we see? We've seen a day where nothing happened in terms of ETF flows, just 1 mil inflow. We've seen the 11th, where we had 500 mil of inflows. And then we've seen the 12th with almost 300 mil of outflows. And then the 14th with 500 mil, and yesterday with 250 mil of outflows. And then we've seen this date in the middle, which I skipped on purpose, the 13th of November, with 860 mil of outflows. And Saylor did buy 800-ish, 830-ish mil. So in absence of that buying, it would look way worse, because this single day of inflows in that period with 500 mil would not have offset the ETF selling. So I'm not persuaded by the argument to say it's centralized exchanges manipulating the price. I'm not saying that they're like innocent, but I don't think that this structural downtrend from 120K to 90K where we're now it can just be explained by centralized exchanges selling. And I do think that despite all of that outflows and despite all of that ETF selling, then it's a still pretty strong case for BTC to hold up so well, relatively speaking. And maybe that is the answer to your question, that the next buyer, the marginal buyer now, is institutions. They keep buying, apparently. Sailor keeps buying. Even El Salvador, even though, yes, it is to a lesser extent, they keep buying. The question is when's the selling done? Now, if we just look at the last 3 days on CoinGlass with the Bitcoin ETF outflows, they have slowed down from 866 to 492 to 254 mil. So if institutions keep buying and at some point sellers stop selling, then that might shift the pendulum again. And then the question becomes, when are the next people, apart from institutions, starting to FOMO back in? And is that retail again, or who, like, what needs to happen for that retail segment to want to FOMO back in again and to want to start buying again?
Yeah, I don't know if I'm aligned there. I mean, I think we discussed retail a little bit the other day. I think retail are out, tapped out. They're not here at the game. I do think, as you say, that is going to be the institutions and just whether they continue to buy. And I actually don't think. I think a bunch of them will get spooked by this. Maybe some of them will see that, okay, this is on discount now. And maybe, to be fair, Bitcoin is separate to everything else. I think some of the other stuff, the tech related crypto assets, are far more vulnerable than Bitcoin is. Even if Bitcoin sees a bit more of a drawdown, I'd be far more concerned in the medium and long term health of the other assets, whereas I'm less concerned for Bitcoin in the medium to long term. Although I still think potentially there's more downward pressure in the short term. But yeah, I'll just make that distinction between, okay, if there's more downward pressure on the more speculative tech tokens, whether that's ETH, Sol, Hyperliquid, or otherwise, and admittedly, Hyperliquid's doing great right now, right? Then you know, I think those will struggle to come back in the same way. Final thought there, Ledge, before we get into the headlines, because we've kind of gone around there, but I thought there's some interesting little other bits to get into today.
Yeah, final thought would be that if this structural transfer is happening and BTC is more moving into institutions' hands, which I think is maybe the part that we can like both agree on, that institutions have like bought significant amounts of BTC, then the question is if BTC will change in the way it trades. Like if you make the point that institutions typically are very sensitive to macro conditions, to monetary policies, if we're seeing QE happening, then institutions might be happy to hold. But also if the like macro faces headwinds and we see a tightening happening at some point again, I would make the point that BTC is probably still the most volatile asset on the books, and this would be the first one that they typically would want to get rid of. So with basically the market up to now, you had people holding BTC for 10 years and just waiting for enough liquidity to cash in billions or hundreds of millions in profit. But now if the holder base is changing and goes more into the institutional direction, maybe you need to start to think how institutions are like planning and trading and what their like exit triggers are for when they want to sell.
I'm just thinking out loud here, final point, because I think this is helpful. It's helpful for my thinking, so hopefully it's helpful for other people listening in as well. I just hate DATs. Like, I think the DAT, and I was vocally inquisitive and critical of DATs kind of from their inception. They didn't really seem to make much sense. There was obviously a trade to be made on all of them where they say they're going to buy a ton of money, a ton of a specific asset, and then you buy it, and then they buy after you, and then you sell because that's the buy pressure done. And then the price goes down because they were the final buyer for a lot of these assets. That was it. That was the exit liquidity moment, was when those DATs came in and told you, I'm going to buy 5% of the ETH supply. Okay, so sell it to them. And then there's no one going to buy 5% of their ETH supply after that. You know, Avalanche, Hyperliquid maybe is in its own bucket potentially. Solana, all of these DATs just bought at higher prices, sent the price much, much higher, and just been designed in a way where it really felt like they were trying to extract as much possible by trying to create this MNAV and get really, really fast exit liquidity for a variety of their stakeholders. And so there's just something very rotten about that whole thing. And maybe I will feel far more confident. I don't know. I need to think about this more. I'm just thinking about it live. I think I'll feel far more confident when some of these have either disappeared or something should blow up with it. I don't know. I don't know what it is. And as I've said before, I can't predict the exact things that are going to happen. I can only get a sense of like, okay, the risk levels have gone up in these rough ways, and then I need to protect myself based on the indications I'm getting from the market. And I think I don't like that there's so many DATs with so much money. I thought that they were stupid from the beginning. And you know what my rule always was, when you see stupid things happening, you got to sell a bit. And they're still around and they're still posturing that, yeah, everything's fine. Tom Lee's still on the thing saying ETH is going to go to 7K, which is much further down than what he said before. So like, until this just gets cut out, I don't think we bottom out. So again, I don't even know if I think, I'm just like articulating one potential idea that I have in my mind as I'm thinking about it live. But as I'm saying it, I like the sound of it. So I don't know what you think about that, Ledge, and then we'll get into the headlines.
Yeah, no, I agree with that. I'm not a big fan of the DATs, and I think with Tom Lee, I mean, how much did he lose already? How much is he down? A very fair amount of money. I want to look that up, but the article on Decrypt, which I wanted to pull up, is not working either. But I think that yeah, those claims of ETH supercycle, ETH going to 100K, ETH going to, I think the most ridiculous number, if you did the math on the market cap, and I said that on the show, was that it would be worth twice as much as the entire S&P 500. Like, there's no way that you say that and believe that as a sane person. Like, there's no way that this is your conviction to say ETH is gonna flip the 500 biggest companies in the US of A. So obviously there's like a ton of marketing and hype creating and knowing that this makes headlines. And yeah, I like to take it on mind to say that you're far more confident in a world where DATs are not the things that are making headlines, but other things are instead.
I mean, maybe they'll still exist in some capacity, but there's just way too many. It's just been done in a gross way,
Yeah,
in an extractive way. And I'm just checking the comments, like English in the comments saying he's a DAT hate too. But Mick asking, Bitcoin's down 30% in the past 30 days. How can it go another 50? Like, can it? I don't know is the honest answer to that. But I guess what I'm trying to articulate here is one of the stupider aspects of this cycle, which was designed by people trying to extract as much of liquidity as possible for their own stakeholders, is still ongoing from what I can tell. And maybe some of them, this is not like a complete sweeping statement. Maybe some of them are designed more thoughtfully and more responsibly, but it was clearly something that was going on. And until something breaks there, and maybe it's breaking behind the scenes, I don't know. We have heard some stories of some people selling and selling their underlying asset to buy the shares back, for example. But I don't think it's still there in front of us. So until I can see a bigger wound to that kind of vertical, I don't like the situation that we're in. Yeah, Bongo in the chat saying, "Hey, every DAT except for strategy," and arguably strategy still are doing some things that have made their original holders unhappy as well, right? Even if they might be fine versus everyone else. So those are some thoughts there. That was like live thinking. I want to think about all that stuff more, but I like the way it sounded when I said it. So maybe those are the things I 100% think now. Okay, Ledge, passing over to you here. We've said Bitcoin's dipped below 90K. S&P is beneath 50-day moving average. We've got 15 minutes left of the show. Let's get through these three headlines. I think that discussion was important that we've had. let's focus it a bit now into some of the numbers.
Yeah, let's keep it a bit shorter here. S&P is down, as you said, it's down 1% on the day. It is down 2.4% over the week. Has moved down below the 50-day moving average for the first time since April, coming by a post by bar chart on X. And I think just to get some more stock data from around the place, Nvidia significantly is also down. It's down 6% over the last week. It's down another 2% on the day. And we do have the earnings call for Nvidia coming up tomorrow, which I think is going to be an important earnings call, just to gauge a bit the sentiment around tech stocks in general, which is certainly one of the reasons we're seeing the Nasdaq correcting. I mean, pretty obvious, but also crypto correcting as a result of that. The other thing I wanted to check in quickly is the Fed decision in December poly market, because there's been significant changes there. So what has happened is that now, for the first time in a long time, the sentiment is flipped, with more than half of the market, 53% thinking, there's not going to be a change. 45% still think there's going to be a 25 pips decrease. But this flippening, so to speak, has happened a couple of days ago, and now the gap is widening in the other direction, meaning that more and more people start to think that there's not going to be a rate cut in December, which is definitely affecting the market sentiment as well. And just to check in with another poly market, what price will Bitcoin hit in December, which now also sees $31 million in volume, just to see how low the market thinks that we will go. 40% thinks we're going to go to 85K or below. Only 13% think that we're going to go to 80,000. And only 3% think that we're going to retest all-time highs and go below 70K. But that is obviously only the market for November. If we look at the January data to see what the outlook on that is, it's still a bearish one. You still see 36% thinking under 80K, but you also see 62% thinking that we might go higher than 100K. But keep in mind that with this quote-unquote bullish bet, this is way less volume, that only has 30K in volume, whereas the quote-unquote more bearish bets like the 80K or 70K price point see millions in volume. So don't be tricked by the 62% thinking that we're going to see 100K in January, because the volume on that is absolutely insignificant compared to the other bets in that poly market.
Got it. Interesting. Am I right in thinking that some like poly market seems, well, it's probably an easy way to make money. Well, so I was going to say it's an easy way to make money and lose money at the moment, which means that it's neither easy to make or lose if you can do both. But it just seems super volatile. And actually, every time you look at it, you can see like some inefficiencies, I think. I do think it's an interesting way to place an interesting bet on these assets. Like, for example, the Monad pre-sale, kind of going off into a different topic. You can currently bet on how much they'll raise. And I looked at this earlier and I thought, okay, damn, the number that's already gone higher. So I think when I looked at this earlier, it was 800 mil. So they've obviously only had 100 something mil of commit so far. And for the people who are just listening in, what you can see is 91% are saying yes, they will get more than $400 million of commit. Only 64% are saying they'll get more than 600 mil. 21% are saying 800. This is a 4 or 5 day raise. So obviously the first day seems underwhelming, right? When it's only 100, and I think people looked at it and was like, oh, okay, this is not that much. But when you've got a 5 day raise, like people come in at the end. People are waiting to see what other people do first, and then they come in later. So 800 was down at, I think, maybe 12 or 15 earlier today. Now it's up to 21. And I was like, all that needs to happen in 2 days' time or 3 days' time is for the number to go up much higher. And you can probably make anything between 10 to 20 to 30% as it just gets re-rated And it doesn't need to happen, right? Remember, you don't need to, you can just sell it when you can sell it before the conclusion. You don't actually always need to be right. You just need to see it move in that direction and the odds will update. So that was one of the things I was thinking. I think there's interesting opportunities on Polymarket, but final thought from you here before we hit the other headlines.
There definitely is. I'd be curious to see a statistic of how many people are losing money on Polymarket versus making money. I saw someone posted a while ago on X that it doesn't take a lot. I think it just takes a few grand to be in the top something percent, top couple percent of Polymarket. But that's definitely something I would like to check in on and circle back on one of the future shows when we have X working again.
Yeah, I think one of the really, really dangerous things that's happening is I saw someone, I think they were like betting on 90% pluses all the time. And they were
Mhm.
like accumulating little wins, like take 10% here, 10% here, 10% here. But the thing is, as we said, like some of these markets are really volatile and it's not always the whole point is 90% is not 100. So even
Yeah.
though you might think this is almost guaranteed and then you just take your 10%, the whole point of probabilities is that there'll be a time when you lose everything. And then when you lose everything if you hold it to their conclusion. So it's not as easy as people think, I don't think. So you definitely want to keep that in mind.
Coaches giving that extra context is less than 4% who are profitable on Polymarket.
Crazy. So yeah,
That's
that kind of
horrible.
backing on my point. Like if you're super strategic with it, maybe it's good, but do not think that this is easy money by any means because it is not. And I
Okay.
know coach specifically works with these odds in different ways and can apply them pretty well. Um, so I take
So
his
that tells
point
me
there.
if it's only 4%, they will regulate the prediction markets heavily. Like
Well,
think
yeah,
about
because it's just
the
gambling.
whole the whole CFD trading that had like what 70% losing money on that, and contracts of difference that is, and then they came in to regulate that very very heavily because so many people were losing money. And if if only 4% are actually making money on Polymarket, so 96% are losing, that's worse than meme coins probably, and means that people will come in. Slightly better
100%.
than sports books is what coach is adding for context.
It's just going to take people a little bit of time to realize how hard it is and how much like gambling it is, which should be obvious, but it's going to take people time to catch up, and it looks like it's going to continue anyway for the meantime. Right, we've got only 6 minutes left now of the show. We've got a couple more headlines to get into, both of which are kind of interesting. Maybe I'll just do this one quickly. Legendary, the Aave launch. This is news that Aave's launched an app with 9% APY and up to $1 million in protection. So I think that one is pretty big news. I'm literally just going to read off the screen that you're showing here, Ledge, because I can't get it up on my own. Do you have the Aave article as well, the preloaded?
Um,
This one. Yeah. So here we go.
is there an article for you to read?
No, this one. So if you just scroll up here, so this is the news that Aave have opened the waitlist for an iOS app for you to basically access or have a neobank with them, where you can earn up to 6.5% on your stable coins. I think there's some boost which can take it up to 9%. And the crucial thing, I think, which is super interesting, is that they've got industry leading balance protection of up to $1 million. For context, I said this in the chat earlier today. In the UK, you get £85,000 of balance protection from the government. This is saying that Aave is guaranteeing and protecting $1 million of your deposit. That is an absurdly better deal than what you get in the UK. I don't know how that compares with any Austrian
100K for the EU is what
100K.
yeah.
So this is a game changer, and we've been talking about neobanks in general, being quite impressed with how they're designed. This is the first one where I've heard anything about balance protection. Talking about the insurance side of things, I think it's really really important, and hopefully this can set a standard for the default position of all uh, deposits that we have places. Admittedly, one thing I'm sure we're going to see with this, and if you scroll back, if you go back to the Twitter tweet that you had on this, some of the details around, the other one. Yeah, this one. So I think, one of the things that's going to have to be the case with this is that you are going to have to KYC. It's going to be more of an account, I believe. So in this tweet, it says from ALO, said $1 million protection is huge. One of the biggest issues we've had in DeFi is insurance for deposits. The burden has been on the user. And now it looks as though Aave have worked out the insurance in the background. Packaging this into a nice native mobile app makes DeFi extremely competitive with existing fintech apps. But in the small print, it says Aave is introducing insurance-backed protection for Aave app customer balances, providing up to $1 million in coverage per eligible customer once active, subject to maximum policy limits and conditions. Full details, including limits and eligibility, will be shared upon launch. So it doesn't say that there around KYC, but I think this is, in order to get that kind of protection, you're not going to get it without KYCing. Whereas, currently in Aave, you can just use it completely permissionlessly. What do you think about this foray into the kind of neobank environment, the guarantees that it's providing? And is that something you'd be happy to do, even if it included KYC and all of this stuff?
Yes, absolutely. I wanted to load the blog article, which is not working in that browser. It's working on another browser. So I'm just going to read off another browser to give some more details, but we can't get this up on screen for the moment. So apologies for that. The Aave app supports over 12,000 banks and debit cards, which is an insane number, while also supporting stablecoin deposits. Link your existing bank account in minutes and start earning higher rates on your savings without switching banks or opening new accounts. That is a crazy, crazy good integration. Then in terms of fees, there are no recurring subscription fees nor asset under management fees. Furthermore, there are no deposit or withdrawal fees for deposits from and withdrawals to from bank or debit cards. There may be minimal stablecoin withdrawal fees if withdrawing to an external wallet, depending on the chosen stablecoin denomination and market conditions. Finally, Aave Labs keeps the small difference between the savings rate offered to the users and the underlying rates earned. So that is also a massive, massive deal for them. And just to maybe add to the list of balance protection, US and Oxy also said it in the YouTube comments. US hits 250K. You said 85K for the UK. The European Union sees 100K in euro. That's like around 117,000 US dollars. So it's an incredibly, incredibly attractive deal. Definitely want to do that. Definitely want to get on the early access for that. The thing that I would like to understand is the detailed terms and conditions for the balance protection. Like, who is guaranteeing that? What does up to $1 million mean exactly for me as an individual? How much will I get? Do I only get 10K or do I get the full 10? Do I get the full mil if I were to deposit a mil into that? But under the assumption that it's a reasonable set of terms and conditions, I would love to do that with a significant amount of money.
Yeah. Obviously, Aave being realistically one of the best DeFi brand, if not the best by far. It's the most trusted, the most battle tested, and therefore I think a lot of that trust would port over into this banking ecosystem as well. So very interested in that. We'll keep an eye on that as we kind of learn more of that product coming to market. But as I said, I think some of the waitlist is open, so you can sign up if you are in an eligible region for now. Final headline, guys, before we close out the show. We're already at time, so we'll do this one relatively quickly. Just wanted to note that Hyperliquid has been outperforming everything. The market is looking terrible. Hyperliquid is up 6% now on the day to $41, whereas everything else is down significantly. A couple of tweets coming out of the Smartest Money Telegram, which if you're not in, you should get in. He just posts various things that he finds interesting every now and again. One of the biggest traders, successful traders, and biggest Hyperliquid whales, sharing their ideas and interesting news bits. Because I can't get the rest of the internet up, I'm operating out of here. 2 bits of news, I think, which are driving some of this or supporting this price action. Number one, HypeD new stock offering. On November the 14th, 2025, Hyperion DeFi entered into a sales agreement, allowing them to sell up to $500 million in common stock through Cantor Fitzgerald and Chardan Capital Markets. This event is significant as it indicates potential capital raising for the company. So this is the intention to raise that amount of money, 500 mil, to at least a proportion of which is going to go into the token. And then finally, I just wanted to double check this. They tweeted sell side liquidity crisis in hype. Bobby Diamond hands coming for all of your hype liquid. So Bobby Diamond is the former CEO of Barclays Bank. I believe, I'm pretty sure he's the CEO of Hyperion now, or was he the CEO of a different hype DAT? I just want to double check that, because I think that because that is how we'll know if these are two hyperliquid DATs or whether they're the same hyperliquid DAT, the 500 million relating to the Hyperion DeFi. So Bob Diamond is a former CEO of Barclays and currently CEO of Atlas Merchant Capital. So I'm trying to understand. I'm just going to search Hyperion in the same sentence to see if these two things come together. So I think these are two separate DATs. Ledge, do you have any detail on this?
No, I don't. I don't know that by heart at the moment.
Okay, so this is what we know. Hyperion DeFi, which is actually the DAT Bread kept buying, but apparently he's got destroyed on it. Like the share prices just kept going down aggressively. So Hyperion DeFi a few days ago entered into a sales agreement to sell $500 million worth of common stock. And then Bobby Diamond is the former CEO of Barclays, and he's in charge of Atlas Merchant Capital, which is a global investment firm. I'm trying to make the connection here, but it's hard for me to... let's see. Atlas Merchant Capital announces $888 million business combination in July 2024. Let me find this, because Hyperliquid. So what was the name? Okay, so they took over Sonnet Biotherapeutics, a newly formed entity by an entity, Atlas Merchant Capital. So I think these are two different ones, to be fair. The newly created entity will be named Hyperliquid Strategies. There we go. So look, I think these are two separate Hyperliquid DApps, which are getting ready to basically deploy. Atlas Merchant Capital announced an $888 million business combination. So I think we need to dive in there to see how much of that would be hype buy pressure, because I don't know. Okay, maybe it's 300 mil of cash invested, gross cash invested of at least 300 mil. So need to double check on those things, because we're coming to the close of the show. We're going to have to close out here. But I think that is a lot of the narrative of why Hyperliquid is outperforming to such a degree. One final thought, though, which I will leave you guys with, and maybe a quick comment from Legendary. Is there going to be a Hyperliquid Season 2 airdrop? What do you think? We obviously got that around 1 year ago. I think we're 10 days away from the first airdrop anniversary. Do you think there's going to be anything to do with that? Ledge, what do you think of team token unlocks? Do you think they will be selling some? Do you think some of them might be wrapped up in some of these sales to the DATs, trying to kind of do an OTC version? What do you think?
Personally, not too concerned for the team unlocks. I don't know if they're going to wrap them up in DAT sales, what they're going to do with them, but I don't think that they will impact the price, because I don't think that they're going to be dumped on the market. The thing that I do wanted to also quickly comment on is, well, Hyperliquid is up 6%, and all that reasoning makes a ton of sense. At the same time, Aster, who doesn't have that, is up 7% on the day. So maybe it is also the fact that the market is realizing that out of all the tokens for products, this is a use case to have a perp dex, to have people trading perps. That also works when the market's going down. People are making money shorting. People are losing money longing at the moment. Works the other way around in an up market. And both Hyperliquid, Asta, or other venues that allow you to trade perps are making money independently from where the market's moving. So that would be maybe my only counterpoint to that if it were so specifically a result of the DAT news, then I would not expect Asta to be up the same amount as Hyperliquid.
Okay. Yeah, look, I think that's fair. It's a fair counterpoint. Let's see. I would still be super cautious with all these assets. In a way, it's some type of DAT trade. Asta, I don't know. I don't treat it the same as all the other tokens. I feel like there's some separate games going on there. It might not be DATs. Maybe there's some other games going on. I can't pinpoint them.
Yeah, it's fair.
but there might be some other games. So it's like the DAT buying on one side, some other games on the other side. I don't know 100%, but I take your point. It's those perp dexes that are up. So that's maybe the broad takeaway before you drill down into the details. But guys, that's been a great show today. Thanks so much for joining us. Apologies, ran over just a little bit. Just a reminder that we will be back tomorrow, same time, same place. We do this every single day, Monday to Friday, 7 a.m. Eastern time, live on X video. Well, not today because the whole of the internet went down. Usually we'll be live there, and we'll also be live on YouTube where we are now. You can catch us on Apple and Spotify as well. Please do go follow the Modern Market on X, Spotify, Apple, and TikTok, where our shorts are. I bet you didn't know that necessarily. Have a good day, guys. Thanks to Legendary for co-hosting with me. Thank you for joining us. We'll be back same time, same place tomorrow. Have a good one. Bye-bye.